Did you know that in the United States, homeowners could pay up to 20% in capital gains tax when selling their property? The actual amount varies based on several factors, including your income and the duration of ownership. Today, we'll explain the complexities of capital gains tax on property sales to help you understand what you might owe. So, let's get started. What is capital gains tax? Capital gains tax is a type of tax that you pay when you sell something for more than you spent to buy it. It's like when you sell a toy that you bought for $5 for $10. The extra $5 is your gain, and you might have to pay tax on it. Now, when it comes to selling property, it works the same way. If you bought a house for $100,000 and later sold it for $150,000, the $50,000 you made is your capital gain. This is the money that the capital gains tax could apply to. Determining capital gains. Determining capital gains is like figuring out how much money you made when you sell something like your house or a piece of land. It's pretty simple to calculate. You take the amount you sold it for and subtract the amount you originally paid for it. Let's use numbers to understand this better. Imagine you bought a house for $200,000. Years later, you sell it for $300,000. To find your capital gains, you do this math. $300,000 sale price minus $200,000 purchase price is equal to $100,000. So, your capital gain is $100,000. Improvements. If you spend money making your house better, like adding a new room or updating the kitchen, this can increase the original value of your house. For example, if you spent $20,000 on improvements, your purchase price in the calculation becomes $220,000. Original $200,000 plus $20,000 improvements. So now, your capital gains would be $300,000 minus $220,000 is equal to $80,000. Depreciation. Sometimes the value of things goes down over time, like with some types of property or business equipment. This can decrease the amount of capital gains you calculate. Tax rates. Capital gains. Tax rates depend on how long you owned the property and your income. For short-term gains, property sold within a year of purchase, they're taxed like your regular income, up to 37%. For long-term gains, property held for more than a year, the rates are 0%, 15%, or 20%, depending on your income. Let's say Jack, who files as a single status, sells his house after 2 years for a $50,000 profit. His annual income is $100,000. Based on the 2023 tax brackets, his long-term capital gains tax rate would be 15%. So he would owe 15% of $50,000, which is $7,500 in capital gains tax. Duration of ownership. The duration of ownership of your property affects how much tax you pay when you sell it. There are two types of gains, short-term and long-term. Short-term capital gains. These apply if you sell your property within 1 year of buying it. The profit you make is taxed like your regular income. So, if you usually pay a high income tax rate, your short-term gains will be taxed at that same high rate. Long-term capital gains. These apply if you hold the property for more than a year before selling. The tax rates for long-term gains are usually lower than short-term. Depending on your income, these rates can be 0%, 15%, or 20%. The longer you hold on to the property, the less tax you might have to pay when you sell it. This is why some people choose to keep their property for at least a year before selling. State-specific considerations. When you sell property, it's not just the federal capital gains tax you need to think about. Each state can have its own tax rules too. Some states might charge extra taxes on the profit you make from selling your property, and these rates can vary a lot from one state to another. In some states, the capital gains tax rate could be quite high, while other states might have lower rates or even no state capital gains tax at all. Also, some states might have special rules or exemptions, especially for primary residences. So it's really important to check the specific tax laws in the state where your property is located. This will give you a complete picture of how much tax you might need to pay when you sell your property. Consulting a local tax expert can be very helpful to understand these state-specific considerations. Professional advice. Understanding capital gains tax can be complex, especially with different rates, exemptions, and state-specific rules. That's why it's important to talk to a tax professional. They can offer personalized advice based on your situation, helping you understand how much tax you'll owe and any possible ways to reduce it. If you're feeling unsure or have more questions, consider booking a free consultation with us. We can help guide you through the specifics of your situation. Just click the link in the video description to set up your appointment. We're here to make understanding and managing your property taxes easier. And that wraps up our video on capital gains tax when selling your property. If you found this video helpful, please give it a thumbs up and subscribe to our channel for more insights and tips. Don't forget to share it with friends or family who might also find it useful. And if you have any questions or experiences you'd like to share, drop a comment below. We love hearing from you. Remember, for personalized advice, you can book a free consultation with us. Just check the link in the description. Thanks for watching, and see you in the next video.